At some point, you're going to be looking at retirement. And this video is for every single person. You should be thinking about retirement as soon as possible, because the sooner you can plan for retirement, the sooner you can start enjoying that. And I'm sitting down with my good friend Joe Zentner, who was able to actually retire through mortgage note investing. And in this video, we're going to be talking about how mortgage note investing was able to help my good friend Joe retire and what that looks like. Welcome, Joe. How are you doing?
I'm doing okay.
So my good friend Joe, as we're recording this video, he just got back from a beautiful, beautiful family camping trip and vacation. You were gone for about how many? Almost a month, right?
5 weeks, yeah.
You were gone for 5 weeks. And would you say a lot of the, mortgage note investing allowed you to take on that trip and be retired and not have to worry about, I got to be clocking in or be at a specific place?
Directly, no. Indirectly, absolutely. Let's look at household finances. You typically will have expenditures of this amount every month. Every single month, those bills come in, plus your extra expenses that you will incur. You need a way to pay that every single month. What a real estate note does is pays X amount of principal and interest every month. And so if you have a note that pays that much, and another note that pays this much, and another note that pays this much, and another that pays this much, you get the point. And so that's the goal, is to have enough note income to cover your expenses plus a little. And if you're really good at it, why not have that much more?
Yeah, so essentially you started figuring out, okay, I have these expenses that are constant, right? Whether it's a mortgage, whether it's insurance, whether it's, food, groceries, all those things. And you started adding a note here, a note there to start offsetting some of those expenses. And then eventually that note income exceeded what your consistent monthly expenses are, right?
Right.
One thing that, we talk about in some of the classes and meetings that we have is you want to start figuring out how to lower your expenses, right? And how to increase your income through mortgage note investing, right? As soon as possible, because what happens for somebody that's trying to plan for retirement, let's say at 55 years old versus somebody that's 35 years old?
Well, the more time you have, the more you can do. And the harder you work at it when you're young, the more likely you'll be able to retire at an early age. So in my case, I worked for half a dozen companies over the decades, and each one had a 401k that I contributed to, and there was some amount of matching. There was some amount of earnings over the years, not all years, but many of the years there were earnings. And so what I was able to do was move that money out of the stock market, which I contend is valued based on opinion. We've seen this very week, the Dow Jones dropped 1,000 points in one day. It's based on opinion. There are those that would argue against that, but my point is I wanted to get away from a higher risk vehicle to fund my retirement into something that, again, on a monthly basis, you get paid this much per note, and it's something that's consistent as long as everything is going right. And we'll have another video on what happens when things don't go right. And in fact, I try to budget 30% of the notes that I own may go bad at some point in time. So I want to have that extra built into my metrics and my calculations.
And we'll be making sure that we do a detailed video going over what happens when things don't go right, in a sense where somebody stops making payment. One thing you guys will realize over time is the banks, for example, mortgage companies, if you got a loan with them, they very rarely lose, right? Based on certain parameters and certain things. And when we originate notes, we originate them and structure them in a way that whether it's our investor or ourselves, we're covered, right, to where even in the event of a default, you still win. So we'll be going into that here in a second,
Right.
in a future video. But one thing I do want to ask you, Joe, is, as you started accumulating 401ks and maybe even now, did you ever, maybe some people watching this video may be nervous around this time where the majority of the retirement is in 401ks or in the market and they're getting ready to retire? Did you ever feel maybe a little fearful of like, I know I have this much, but I can wake up tomorrow or next week and it'd be significantly less? Did you ever have those thoughts?
Well, I think everybody does. The closer they get to my advanced age, if you don't, you're probably being foolish. Most financial advisors will tell you diversify and limit your exposure as much as possible the older you get. You just don't have the years and decades to recover in a big down cycle.
Yeah, I think one thing that is constant, why do people invest in mortgage notes? Is I think the two biggest things that I've heard is consistency and know what I'm going to be getting on a monthly basis.
Yeah, predictability.
Predictability and consistency, right?
Yeah, now we're pretty good at this. And when we create a mortgage note, we really do a lot of research on the people that we're giving the loan to. We want to maximize the likelihood that they can pay, they will pay, and minimize the likelihood that they're going to default at some point. So our notes are pretty good.
Yeah, and that's why we require people to get a large down payment, because it's, a lot of the, I'm not, I don't know the exact numbers, but I would say a lot of the defaults sometimes are in the FHA, VA type loans where very little are, as far as our down payment goes, versus a lot of ours are usually 15, 20%. Well, I think we probably average about 17% on down payment. That's a pretty healthy down payment, and it's a little bit harder for people to walk away from that.
That's right. FHA borrowers, USDA borrowers, VA borrowers, they have very little skin in the game. And we want to have our borrowers have a lot of skin in the game.
I wanted to go back, Joe, to, as you were thinking about different investments and what you wanted to do, did you ever think about maybe investing in something like maybe gold, maybe, silver, maybe crypto? What were some of those thoughts, or, how did you pinpoint or say, this seems like it makes the most sense? What are your thoughts on gold, silver, and all those things?
Well, they're rocks. I can see why people would want to have gold and silver in their portfolio. Many financial advisors will tell you that's part of diversifying, and I don't disagree with that. It's not for me.
Yeah.
I want to have...
So you're not going to go to the grocery store with one of those rocks and try to buy some groceries?
Well, yeah, so let's say you buy a gold bar and times get bad. The price of that gold bar may go up, the worse times get. However, who's going to take that as payment? The exchange stores, and they always make money when they buy and sell gold.
Yeah, that's something that, I realized a few years back. I remember one time I wanted to buy and sell, silver, and obviously that's something that people don't really think about, right? If you're selling silver, you're going to be taking a cut on the value or what the trading is usually, right? Especially in a time of need, right? There's always buying and selling going on, and people sometimes don't think about that. But.
Yeah, that's true. Again, I'm not really down on them. I just personally don't invest in them.
Right. Awesome. So what has it, life look like after retirement now, and, slowly doing things to start increasing, your note investing and your notes, right? Because I think maybe you've reached a point to where you're, I don't know if the right word is comfortable, or at least it gets your needs, but now you're striving to not only just add notes for you and your wife, maybe, but maybe grandkids, and what does that look like?
Well, I don't know that I'm comfortable. because there's a lot going on politically and economically in our country right now. I think many of us are nervous about the future. So again, going back to this model that I have, which is fairly simplistic, I want enough notes to cover not only that, but things that can and will go wrong. And that's part of my conservative, my fiscally conservative nature to be that way. I'll tell you this, if all my money were in a 401k today, I would be very nervous. I'm far less nervous with that predictable monthly income that comes from each note. And I can't emphasize that enough.
Yeah, and I think the other thing, what I want people to really understand of when we're talking about buying mortgage notes and originating mortgage notes, what exactly that looks like for us and possibly for someone, because one thing that that I think has allowed us to still thrive and do well in this market is that we focus on affordable housing,
Yes.
right? And that's the biggest problem that we have right now in America with the real estate market is affordability, right? It's not supply and demand. It all comes down to affordability. We have a big problem with affordability because of rates are a little bit higher, yes. But I think what a lot of people aren't really thinking about as much or talking about as much is obviously with inflation, the increased cost of insurance. That has played a big role for a lot of people, along with obviously the little bit higher interest rates, the taxes also going up. That has made it for a lot of folks to not have an affordable payment mortgage, right? But we focus on, I would say, under $300,000 homes here in North Texas.
So I'd like to interject something that's a little bit off topic there. Last night I was able to sit in on a webinar. I'll give his first name, a very well-respected attorney named Jeff, and he was blessed to be over in Paris last week for the opening ceremonies, et cetera, et cetera. And he spoke with a number of real estate investors while he was there. The message that he gave us last night in this webinar was, in the socialist country that is France, it is next to impossible for people to own their own homes now. It's something that just does not happen very often. If and when a house comes up for sale, that house has probably been in a family for 50 years or longer. Mm-hmm. And it just doesn't happen very often. Banks don't know how to deal with it very well there. And he didn't exactly say this. This is my interpretation. The further we go towards socialism in this country, the more that's going to be the case, where it's getting more and more difficult for individual families to have their own home.
Right.
He also mentioned that the people that own, or the entities that own homes there, are corporations, wealthy families, and the government. Those three entities control 95% of the housing in France. Wow. And that's alarming to me.
Yeah.
To see that the same sorts of things happening here. There are many big companies that are buying single-family homes in our country, buying more and more apartments. They own them. They're not for individual entrepreneurs like we are. It's getting harder and harder to do that.
Yeah.
And that's alarming to me.
Yeah, no, I agree. Yeah, so going back to the affordability and what we focus on. So let's say, or let's talk about maybe one of your first performing notes that you bought, right? So people can really understand. If somebody says, whether it's 70,000, 100,000, 120,000, whatever that is, what are they expecting? Let's say somebody says, hey, I got $120,000 to buy my note. Instead of having it in 401k, I'd rather have a mortgage note because I know what I'm going to get consistently. what am I going to get maybe on a monthly basis?
Well, I'll give you an example from about 2 years ago.
Okay.
We have two good friends, Mitch and Mike, and they have originated hundreds and hundreds and hundreds of notes from fix and flip properties that they have sold. And periodically they will sell notes, and I bought one from them. I know that their vetting process with their lenders or with their borrowers is very, very good. So they're high quality notes. And just this morning, I got an email saying that instead of the normal $1,406 payment, this month they paid $13,000. So I wasn't expecting that.
Wow.
Effectively, that shaved probably a full year off of the back end of the note. So as that money comes in, I've got to reinvest it elsewhere.
Right.
By and large, that's not the rule. The rule is typically between the 1st and 15th of the month, you get your mortgage payment and it goes into your bank account. And
yeah, and let's say somebody on $100,000, they could be anywhere from probably $900 a month that they're going to get to $1,500, $1,600, $1,700. And it obviously there's a lot of variables. I'm just giving you a rough example, but we have notes where we collect some of those as low as almost like a car payment. We have a couple of notes where they're in the, I think, $300 range, right? We got some that are in the $800 range. We got some that are in the $4,000 range on a monthly basis. So it just all varies and depends. But one thing that I do want to talk about and kind of highlight, I don't know if you saw a post that I made a few months back. I think it was maybe a month and a half or so, where I posted that most people work their entire butt. They work their butt off. They work their butt off. They work their entire 40-year career, right, to get Social Security and get $1,200, $1,400, $1,500. And the crazy thing is that we've done deals where on one deal we're able to get $1,500, $1,600 from one single note. I mean, that's just mind-boggling that somebody can spend almost their entire life working and they're going to count or get Social Security, where through real estate mortgage note investing, they can get more than what they were going to get from their Social Security by doing one or two notes.
so let's look at what that would look like. Let's say I had $100,000 in a Roth 401k account. You take that, you purchase a $100,000 note. It will have certain parameters with it. When was it originated? When will the final payment be made? What's the interest rate? What's the monthly principal and interest payment that's made? And with that $100,000 note, let's say that it was at a 10% rate and it's a 30-year note. We can do the math real quick. I'm guessing the math will show about $870 on a monthly basis. So you've tied up that $100,000 for 30 years, but over the life of that note, you will have made an additional $150, $180 from that 10% investment.
Pretty smart, Joe. It's $877. And I have a video that I go over how to actually use this calculator, 10B financial calculator, so you can click on it and it'll kind of break it down and help you understand the numbers.
So multiply that 877 by 360, $316,000. That's not a bad return over 30 years for $100,000 invested.
Right.
A $216 profit over that 30 years. That's why we like note investing.
And that's what we talk about in some of our classes when you guys are having, whether you're a fix and flipper, whether you're a wholesaler, if you just start doing some of these, even if it's once, twice a year, I mean, you're getting basically the way that I see it is a big savings account, a big bank account, right? Where you might be flipping the property and you may be making $40,000 to $50,000. But instead of making the $40,000 to $50,000, if you're structuring the notes properly, you can make hundreds of thousands of dollars on that one deal. And if you're doing multiple deals a year, you're going to be doing extremely well over the course of the next 10, 15, 20 years, right? But you got to start now. You got to start educating yourself, whether it's reading books, going to seminars, going to different events. All right, Joe. Well, I mean, it's been incredible to see your journey. I know one thing that, we talked about early last year, we had a discussion at an event and you said, hey, I probably want to plan to retire maybe at the end of 2024 or the beginning of 2025. And you surprised me early this year when you said, hey, I'm done. I've already put my 2 weeks. So I wanted to congratulate you on, your journey and all your success. I know for sure that only I know a little bit that it hasn't been easy, right? There's been, things you have to overcome. But if you have any more questions when it comes to real estate investing or Joe's retirement or things that he has done, make sure you put it in the comments below. Any last words on retiring through notes, Joe?
Well, I'll look at it from the point of view of how a spouse would look at it. There's this thing called a nesting instinct, and the ladies have it. And the security that note investing affords us really satisfies that nesting instinct. It gives a great deal of strength and confidence and a sense of well-being, knowing exactly where this is going to come from in the coming months, years, decades.
Awesome. Well, thank you guys for watching, and make sure you subscribe, make sure you follow. We got a lot of online events coming up and possibly some in-person events here in North Texas. So if you haven't already, make sure you subscribe and put your questions below. We'll catch you guys on the next video. Thank you, Joe.